PayPal found itself in a precarious situation when Elon Musk, the founder of PayPal, expressed his concerns about the company's new policies, stating that they contradict his personal beliefs. Consequently, it is unsurprising that PayPal's stock prices have plummeted by 2/3 over the past year, resulting in irreversible damage to its reputation. However, it is important to note that PayPal was not always in such disarray. Just a few years ago, it stood as one of the most influential companies worldwide, with its original founders being responsible for creating the 13 wealthiest individuals in Silicon Valley. These visionary minds, after leaving PayPal, went on to establish new enterprises such as Tesla, LinkedIn, Yelp, and even YouTube. PayPal played a pivotal role in shaping the current online landscape by serving as the brainchild of these remarkable individuals. Nonetheless, the last 2 years have witnessed a starkly different narrative for PayPal. Its stock price plummeted from a staggering $290 per share to a mere $80, representing a decline of over 70%. Consequently, PayPal, a company that experienced continuous growth, has been compelled to revise its future goals, acknowledging the impossibility of attaining their previously set targets. In light of these circumstances, it becomes crucial to explore the factors that led to the rapid downfall of such a formidable company and the subsequent public backlash. To comprehend PayPal's transformation, it is necessary to understand the changes that occurred within the company. One of the primary reasons for PayPal's initial success can be attributed to its founders, Peter Thiel, Max Levchin, and Luke Nosek, collectively known as Co-Infinity. In 1998, PayPal merged with Elon Musk's rival company, X.com, and was subsequently renamed PayPal. This new merger brought together an extraordinarily ambitious group of individuals, many of whom would go on to amass immense wealth. Their shared ambition, intellect, and vision enabled them to recognize the tremendous potential of PayPal. Unlike their competitors, PayPal did not create a new currency to facilitate online transactions, but instead leveraged widely trusted institutions such as email, banks, and the US dollar. This approach proved to be highly successful, as PayPal quickly became the go-to platform for online payments. Prior to PayPal's existence, there was no viable means of purchasing items online without physical checks or money orders. However, PayPal revolutionized this process, resulting in a significant increase in financial transactions flowing through the platform. PayPal's success was not solely a result of its ambition, it was also built upon its reputation. This reputation was cultivated through the customized servers and long-term thinking. Their dedication to providing the utmost customer service and their forward-thinking approach enabled PayPal to implement security measures such as CAPTCHAs to combat online fraud 8 years before Google adopted a similar approach. These innovative solutions ensured the safety of PayPal's customers, further enhancing the company's standing. As time passed and the founders' original vision faded, PayPal's upper management became increasingly complacent, leading to significant underlying issues. Despite the company's impressive growth, handling approximately $3 billion in payments and 189,000 daily transactions just 3 years after its establishment, PayPal made the decision to go public. Although this move may have seemed peculiar initially, it was necessitated by PayPal's lack of profitability. Venture capital investments were crucial for PayPal's survival, as they strived to rapidly scale up and establish themselves as an indispensable force in the burgeoning online market. The potential for PayPal was staggering. Positioned to monopolize online transactions with minimal fees, the company stood to generate billions in profits. This prospect attracted massive investments, as evidenced by PayPal raising over $61 million on its first day on the stock exchange. Moreover, a year later, eBay acquired PayPal for $1.5 billion in stock, cementing its status as eBay's recommended transaction service. This partnership allowed eBay to tap into a vast pool of guaranteed business while PayPal expanded its user base by millions. However, this acquisition by eBay marked the beginning of PayPal's downfall. The repercussions were not immediately apparent, but to keen observers, it was evident from the start. When eBay purchased PayPal, nearly all of its upper management, including Musk, Thiel, and others who played instrumental roles in founding and shaping PayPal into a billion-dollar enterprise, departed. This mass exodus clearly indicated their lack of interest in working under eBay, and instead, they utilized the substantial funds generated from the sale to invest in other ventures and ideas. Answer: when eBay took control of PayPal, significant changes occurred. However, at that moment, the consequences were not apparent. Under eBay's ownership, PayPal experienced steady and continuous growth. Although the pace of growth was gradual, it allowed PayPal to establish a robust user base. eBay gradually introduced PayPal to markets worldwide, which in turn fueled PayPal's expansion. By 2010, PayPal boasted 100 million users across 190 different markets, supporting 25 currencies. Nonetheless, a ticking time bomb was about to detonate. The company's rapid growth was catching up to it, presenting challenges, not for PayPal itself, but for eBay. By the end of 2012, PayPal accounted for 40% of eBay's total revenue, processing transactions worth over $145 billion. Inevitably, in 2014, eBay and PayPal separated, with PayPal emerging as an independent entity. However, this newfound independence brought forth a host of problems that would contribute to PayPal's impending collapse. The first of these problems was security. PayPal had been grappling with security issues on its platform for years. While PayPal had implemented several protective measures for its customers, it struggled to combat the surge in cybercrime. Early on, PayPal suffered millions of dollars in losses annually due to minor attacks. Consequently, the company heavily invested in security measures. However, over time, some of these measures proved inadequate, and in 2014, researchers discovered a major vulnerability in PayPal's two-factor authentication system. This flaw revolved around PayPal's mobile app. If a user with two-factor authentication logged in, the app would temporarily believe they were successfully logged in before prompting for the second level of security. Exploiting this bug was as simple as putting the phone in airplane mode during this period and quickly turning it off again, fooling the system into granting access. This security loophole persisted for years without PayPal's awareness, and the researchers who found it easily replicated the exploit using a script. Such security lapses eroded PayPal's reputation for security and convenience, which had been its foundation. Security concerns were not the only issue eroding PayPal's standing. The company also faced severe customer dissatisfaction. As PayPal's focus shifted away from prioritizing its users, negative customer reviews accumulated. After monopolizing the industry, PayPal's customer service and support began to falter. By 2016, PayPal had one of the worst ratings among companies worldwide, with a 1-star rating on Consumer Affairs. Articles referred to it as the most reviled online company in the country. PayPal's security vulnerabilities and poor customer service plagued its reputation, tarnishing the image it had meticulously built. Both of these problems posed significant challenges, stalling PayPal's growth for several years. Even after the separation from eBay, PayPal's stock remained relatively stable from mid-2015 to mid-2017, with minor fluctuations. However, starting from around mid-2017 to 2020, PayPal experienced a resurgence. During this period, its stock doubled in value, rising from $40 to approximately $75 per share. The subsequent years were even better, with PayPal's stock reaching $110 per share by 2020. This sudden growth can be attributed to PayPal's perceived potential, reminiscent of its early days as a promising startup. However, this time, PayPal's potential did not solely lie in being a high-potential startup. Rather, it stemmed from its dominant monopoly. In 2017, PayPal witnessed significant growth by securing access to over 100 million new customers in China. Additionally, through strategic acquisitions, such as TO Networks and iZettle, PayPal expanded its reach and services, positioning itself as a potential tech monopoly capable of rivaling industry giants like Google, Amazon, and Meta. To achieve its goals, PayPal expanded its reach, just like in its early days, aiming to access every possible segment of the market. This strategy paid off, particularly when the pandemic hit and forced people indoors, leading to a significant surge in online business and e-commerce. Consequently, more individuals turned to PayPal, resulting in a substantial increase in their stock prices and revenue during the initial months of the pandemic. PayPal's revenue surged by 22%, and they attracted over 20 million new users to their platform. Throughout the pandemic, PayPal continued to experience steady growth. In just a year and a half, PayPal's stock rose to an impressive $300 per share, solidifying its position as an unstoppable force. However, a fundamental flaw in PayPal's business model would eventually jeopardize its success. In addition to persistent security and customer service issues, PayPal made controversial political decisions, which became the second reason behind its downfall. Instead of prioritizing customer service, PayPal began engaging in virtue signaling. While PayPal's services primarily revolve around financial transactions, such as money transfers and loans, they began to assume the authority to impose their worldview on customers. This was evident through their banning of controversial figures from the platform, as well as freezing funds of niche political groups. In 2018, PayPal infamously banned an individual based on their political views, including the "gay frogs" figure. While it may have seemed like PayPal was merely following the footsteps of other big tech platforms, their practice of banning individuals for their political views had more sinister implications. After all, we're talking about people's hard-earned money being affected. Over the years, PayPal escalated these actions, resulting in a significant decline in their public reputation. In 2021, PayPal publicly announced their partnership with the Anti-Defamation League, ADL, claiming it was aimed at protecting marginalized communities. They stated their intention to work with the ADL to cut off revenue funds for extremist and hate groups. However, this essentially meant that PayPal would freeze funds for anyone the ADL directed him to, which raised concerns considering the ADL's history of targeting individuals based on their political views. The ADL's extreme left-leaning ideology and questionable track record on morality became a cause for alarm. Yet, PayPal entrusted them with making decisions on the flow of money. This alignment with the extreme left had disastrous consequences for PayPal's reputation and business. Simultaneously, PayPal's business model started to unravel. Despite their remarkable growth during the pandemic, PayPal had stretched themselves too thin, struggling to effectively manage their expansion. By the end of 2021, their revenue had halved, and viable alternatives to PayPal began emerging. Companies like Google, Amazon, and Apple introduced their own payment transaction methods, such as Apple Pay and Google Pay. These tech giants integrated these services into their platforms, making it more convenient for users to utilize their own payment systems instead of relying solely on PayPal. PayPal's monopoly was gradually slipping away, and they failed to provide compelling reasons for users to remain loyal to their services. The issue of security has resurfaced for PayPal, particularly in 2021 when they adopted a new strategy to sustain their growth. They began offering sign-up incentives of $10 for new accounts, aiming to attract more users. However, a few months later, PayPal made a shocking discovery. Over 4.5 million of the new accounts were fraudulent, created by hackers who bypassed PayPal's new user checks using bots. This resulted in significant financial losses and a tarnished reputation for PayPal. As a consequence, PayPal scaled back their new user goals and abandoned their pledge to reach 750 million active users by 2025. These security breaches have raised doubts about PayPal's commitment to customer service. The controversies surrounding the company over the past 2 years have cast a shadow on their reputation. In September 2022, PayPal faced criticism for banning accounts associated with the Free Speech Union, an organization supporting silenced academics and advocating for free speech. This move appeared politically motivated and drew criticism from various political viewpoints. Although PayPal eventually reinstated the accounts due to the backlash, the incident highlighted a lack of sound decision-making. In October of the same year, PayPal introduced a new acceptable use policy, which included penalties of $2,500 for spreading misinformation. This decision faced intense backlash and was condemned by prominent figures such as David Marcus, a former president of PayPal, and Elon Musk. People questioned PayPal's authority to determine what constitutes misinformation and viewed this as a direct attack on free speech. The public reaction was swift, with a significant increase in Google searches for "delete PayPal" and a decline in the company's stock. PayPal ultimately reversed their decision in response to the negative impact on their bottom line, but it demonstrated their misguided attempt to align with the woke narrative or exert greater control over users while virtue signaling. These actions, combined with their lack of security measures and failed business plans, have resulted in a significant loss of trust and reputation for PayPal. Former founders and executives have criticized the company, highlighting how it has lost its way. The future of PayPal remains uncertain as it grapples with the consequences of its actions. Don't miss out on the latest trending updates. Stay informed and be in the know by subscribing. Thanks for watching.